Okay. So, the issue with Bitcoin is that it's no point of risk. What Bitcoin is it's a protocol. A protocol is a fancy way of describing how to do things. The internet is based upon a protocol called TCP/IP. TCP/IP, IP stands for Internet Protocol. And on that protocol, you have the internet. And on the internet is a graphical overlay, basically pretty pictures, which is the World Wide Web. Okay, and then through the World Wide Web, you have all these fancy things. So look over here, practically everybody that's using a computer is using it through the web. Practically everybody who uses a phone these days uses it through the web, or functions with it through the web. So the Bitcoin protocol is very similar, and it has a very similar promise. Now, the Bitcoin protocol also has a digital currency that only works on that particular protocol. Think of it as a road, and it's a road that can go from this block to the next block, from this city to the next city, to the next country, to the next continent, all over the world, anywhere there's an internet connection. And those roads carry only one type of car, the Bitcoin currency car. And that car can go faster than any other car. It uses so little fuel that you can't notice the payment. You realize it seems to be almost free. And it is bulletproof in terms of security. It's very difficult to break into the car. Now, you can rob somebody before they get into the car, or you rob them when they get out, but to get into the car is very difficult. So that is a simplified way of looking at the Bitcoin protocol and Bitcoin itself. So the Bitcoin protocol is Bitcoin with a capital B. The Bitcoin digital currency is Bitcoin with a lowercase b. Okay, so that's my take on Bitcoin. And that's also the reason why so many people and so much of the media fail to understand the potential of Bitcoin, because they're looking at the car and ignoring the global road system. The global road system is a protocol. The internet allows you to transfer data back and forth. And through that global decentralized, which means there's no central thing to shut down, way of transferring data, you have this wonderful thing called the internet, the World Wide Web. Well, Bitcoin allows you to transfer value through a decentralized system. And you can transfer this value, and all the value that's transferred is available on a public ledger. It's called the blockchain. So imagine if you had the internet for value, not just money, but value, anything of value. Do you see how big its potential is? Yet, the media still focuses on the price of the currency. That's like in 1993, with the internet becoming burgeoning and becoming available to the public in terms of awareness, everybody's focusing on the price of a or stock. Now, fast forward 20, 25 years, in retrospect, who cares what the price of a or stock is? The internet was so much bigger. And I'm sure 20 years from now, people are going to wonder why everybody's focusing on, whether Bitcoin went from 600 to 400, or whether Mt. Gox crashed. Mt. Gox is a company, probably one company, and they went out of business. It has nothing to do with Bitcoin. Suppose AOL or Pets.com went out of business. Does that invalidate the internet? As a matter of fact, nobody even connects Pets.com went out of business with the internet in its value. So the very, very small minority that understand Bitcoin and what it is and its value potential is the group that I think truly benefit financially, strategically, career perspective, etc. Because it will change the way the world is done. You can now transfer value as quickly as you can transfer something to a click on a mouse to a website. Okay, large amounts of value, small amounts of value, you can identify it, you can put it in the value. The protocol has its own scripting language you can program. So I can take money and I can embed the money with instructions to a program, and then I can pass it to you. So these are the new UltraCoins. Okay, let's take UltraCoin now. UltraCoin. UltraCoin, yeah. This is my startup. UltraCoin is basically programmed with Bitcoins. And what we do is we program it to do all types of fantastic things. The first step is to disintermediate the Wall Street banks. So we're taking all the services and products that the Wall Street banks offer that have a 20% margin or higher, and returning them into software programs and embedding the programs into the money. So, as an example, these are really just business cards actually, but good marketing, right? It's fancy. It's 24 karat gold. So, let's suppose I'm going to pay you one UltraCoin for one iPhone. Okay? Now, I programmed the UltraCoin to consummate this deal. And the program says I'm going to pay one UltraCoin for one iPhone 5S. Okay, unused. So, I send you UltraCoin through the Bitcoin protocol, Bitcoin network. You mail me this iPhone 5S unused. I get it in the mail. Wow, it says iPhone 4 heavily used. Strange, that's not what we agreed to. And you say, that sucker. And you run off with the money, and you want to take your girlfriend out because, you know, you made a few $100s. You go spend it, it won't come out of your pocket. You look in your pocket, you can't find it. What happened?
You retracted it like a credit card.
Excuse me?
You retracted it like a credit card.
No.
Like a credit card, you can stop the payment.
Right. That's interesting. So I want to address that. First, I'm going to tell you what happened, and then I'm going to show you the difference between the two. What happened was the money was programmed as part of our contract. We embedded the contract into the money. He attempted to breach the contract, but you can't breach the contract because the contract is the money, and the money is the contract. So he has two choices. He can send me the iPhone 5S, or he can go without the any coin at all, which means he actually took a loss. And we can make the contract more complex by saying if he doesn't send it, then he loses collateral. So he can put money up just to send this, and I put money up, so he takes a double loss. And there's a variety of other things we can do. That's what this application up here is. These are financial swaps. I'll go through in a minute, but what I just explained to you is a simplified version of this application here. Okay, that was your 5S, and sucker gets his money back. Okay.
I'm not understanding how you stop the transaction. Yes, there's an air conditioner back here making a lot of noise. I'm not understanding.
Say it on recording. So.
Okay, I'm not understanding how you stop the transaction. I'm not clear on that.
Okay.
Yes,
I understand. So, I didn't stop the transaction. The transaction is a contract. The contract was embedded in the money. So, embedded in the money, that's programmed. You have Microsoft Word on a computer. So you go to a middle box with a keyboard, and you open up a window, and you could have words in it. And hit print, it goes up to the printer. How is that possible? Well, you take instructions, and you put it in the software code, and the hardware exercises the instructions. We're taking instructions, we put it into the digital money, and the money exercises those instructions. Those instructions are the contract that we have between A and B. He's to send me something identified as X, and when you agree that X receives, the money is released. Okay? If the contract is broken, then the money is not released.
You have to tell the computer that your contract is broken. You have to write something in the program.
Right. She asked me to write something in the program. What it is we both sign it. We have a signature. This is Reggie's signature on it. Say his name is Peter. Okay? And then we sign off with our last name or check mark. This is oversimplifications in the computer code. If you both don't sign off, he can't spend the money. So the only way for him to spend the money is you both have to sign off. Now, if I didn't get what I asked for, I'm not going to sign off on it. Okay?
What if you did get what you asked for and you didn't sign off?
Well, if I did get what I asked for and I didn't sign off, we post collateral. So I put 2 Bitcoin up, he puts 2 Bitcoin. So if I did get what I asked for and I didn't sign off, I'd lose Bitcoin. Now, there's no incentive for me to defraud him because I lose money trying to defraud him. Just like if he had to put a Bitcoin up to send that, there's no incentive for him to defraud me because he'd actually lose money, right? Any lawyers here, one of the elements of fraud is called scienter. Scienter is the intent to do wrong, okay? If the intent to do wrong doesn't benefit you, then you don't have the intent to do wrong, so scienter is absent. So that's what makes, this application zero trust. You don't know the other side that you're trading with here. You don't have to know them. You don't need to trust them because in order for them to do wrong, you have to take a financial loss. Okay, now the only reason why a party will take a financial loss on purpose is for a strategic gain. That's the only reason. In an anonymous system like this, where both sides are lying, you can't take a strategic gain because you don't know who you're dealing with. So suppose I'm mad at him because he took my girlfriend last week, and I want to get him back, and I enter in a trade. Well, I don't know if I'm trading with him or not. So I could try and lose money with everybody in the world so I hit him. And just my luck, he went to or do you play by the rules? Okay, have I answered the question? Okay. So, does everybody understand where we stand in terms of programmable money and how Bitcoin is different from the regular dollar? I call it dumb fiat money, euros, dollars, yen, etc. Those are dumb. This is programmable. Okay, let's try the same deal, with US dollars, 5 US dollars, also known as Federal Reserve notes. Okay? Can I buy your iPhone 5S? Okay. You have anything to sell me? You see how this is already working, right? Since nobody could defraud me, they don't want to do a deal. Only an honest character can do a deal. Would you like to do a trade? Okay, $5 for a notebook. Probably valuable notes with UltraCoin. This is worth a lot more than 5. Okay, now, wait a minute. It's blank. He's over looking great, sucker. Got me again. So, I want to get my money back. How do I do it? I gave him regular dumb fiat. How do I get my money back? Anybody?
You might have spent it already.
Say it again.
You might have spent it already.
Any other ideas?
Yeah.
Money. Okay, suppose you're on the other side of the world. I gotta buy a painting. And then after risk physical harm, or I can bring him to court and go through the friction of the legal system, or I can track him money down. But all that is difficult. That's the major disadvantage. One of the major disadvantages of dumb fiat versus smart. Time, more amount of time, friction, and cost. Okay, you don't need a third party. I have to trust him in this deal. Now, they have third-party systems, escrows like PayPal and eBay, where they'll put the money in escrow as he sends the product, and then after they all agree on it, they release it from escrow. But now you have third-party counterparty risk. A counterparty is someone who stands opposed from you, counter to you. So now you have risk from the guy you're doing business with. You also have the risk of eBay, right? Not siding with you. You have the risk of the financial centers who are holding the money. You've multiplied it several times. Most people don't realize this. Okay? eBay doesn't agree with you, you get a chargeback. You go to credit card companies and PayPal. I've been charged back several times because people said they didn't like the product. So if you didn't like it, you had to check it out before you bought it. And I've had accounts go negative because 2 or 3 big deals were charged back. And we would empty the account out, and then I had to pay banking fees and they froze the account. These are all for things I never did wrong. Okay? With the digital money, yeah. Now, luckily, he was a good guy, and he gave me the money back, and we didn't have to do it the hard way, fisticuffs, right? But now you see one of the major disadvantages of dumb fiat. That's one of many. You have trust issues, you have expenses, you have time lag. Suppose I want to make a big transaction. So, 2 big truckloads of Federal Reserve notes, otherwise known as dollars, or yen, or euro, versus a click of the mouse. Okay, now, Federal Reserve notes are also available in different form as well. Okay, and that's your credit cards, bank accounts. Most people are commenting and lamenting on digital money like it's new. Digital money's been around ever since you had bank accounts, you had credit and debit cards, etc. Bank wires. If you go to your bank and you ask for all the money that you have in there, this whole room in it, you open up, you empty out most small banks here. Because they used to be called fractional reserve banking, where they just keep a fraction of the money on their books in cash. So they don't really have the money. They vent it out and they're doing business with it. Or they probably just don't have it at all, which means they're insolvent, but that's a different story. Okay? That, again, is not possible. Fractional reserve banking and lending is not possible with Bitcoin because everything's in a blockchain. What you see is what you get. Okay? Now, Mt. Gox tried fractional reserve banking, and that didn't work. But they did it involuntarily because they got robbed. Okay? But you're getting robbed. If they didn't get calls on that capital, they couldn't push it. And they couldn't do for it. They were getting robbed for years, from what I understand. So that was involuntary fractional reserve. So, have I thoroughly answered all questions regarding Bitcoin and what UltraCoin is? UltraCoin is smart contracts, smart property, program Bitcoin. Okay, any questions at all? I'm sorry? Okay, now I know I'm not so smart as to answer everybody's questions, but you probably have something later on. What we're going to do is we're going to go through a trade. Okay?
How do you know what contracts are being placed? Because right now you just say public addresses, actually transactions. Is
swaps.
Right there. Click the button. That's which one is focusing? That's probably the best thing to do.
I need to be refocused, but I think if I shut one of the light sets off, it might be better, but then I'll get the live data.
Okay, can you explain to what I'm looking at?
Okay. Okay, now this is a financial trading app. So, this assumes that you have some knowledge of financial assets and trading. I'm going to walk through it after I answer this question. Okay? Messiah, sort and swaps by versus swap by initial currency. The first column. No, the first column. Swap with amount in. What are swaps? Think that's it. There you go. So these are the swaps that are in the market that are put out for bid. Okay? So you go through here and you find a deal that you want to take up beside you. The first one is Australian dollars, swap with BTC, Bitcoin. Now, a swap is a contract, a financial contract. I'm going to perform a swap right now. We're going to swap one BTC, go pick on you again. One UltraCoin for one iPhone. I just swapped. That swap was for 15 seconds. So for right now, 15 seconds, I have one iPhone, here's one UltraCoin. 15 seconds later, expiry is over, it's expired. I take the iPhone, I take the Bitcoin. If UltraCoin, not Bitcoin, UltraCoin doubled, right, in that time period, okay, he actually made money. Because he held the UltraCoin, it went up twice relative to the iPhone. You know, it could go up, but still go down to the iPhone went more. So it went up twice relative to the iPhone while he had it. He doubled his money in 15 seconds. One more. Okay.
When you swap, you always end up with what you started, like with the same. Swaps, you always end up with what you started, like if you can't stay with the iPhone, basically, okay. When you do swap.
In a swap, you have to end the swap and unwind it, but you can make the swap as fast as you want, so you're getting better things in there. But at the end of the swap, you do unwind it by getting your back. But when you get it back plus or minus profit, loss, and the profit loss curve can be changed to all types of, you can throw options in there, you can throw cats and dogs and all types of things. Okay, but in general, you just swap exposure and you bring it back. This is swapping exposure. They have physical swaps. You can do an oil for gas swap where you swap 500 barrels of oil for 10,000 cubic feet of gas and literally have a physical exchange. That doesn't happen much because you have large volumes and it's very difficult. So the stuff, most of the stuff on Wall Street is done digitally, computers just like this, and servers. Okay? So the first one, here we go down to the first swap. This is not completed yet. Go down to the first one that says not found yet. I'm sorry. That's 5 minutes. Anyone that's not 5 minutes. Do here. Sort by time and do a 1 minute swap. Okay? Go down to the bottom. You see it says create counter swap. After you click it, you click that button, that automatically generates a counter swap for your perspective. So this guy, there's somebody out there who wants to swap 20 Bitcoin for the equivalent amount of US dollars for 1 minute. Okay? With a plus or minus 120. So since you don't know who's out there, you have an exact, I want an exact swap exactly $20.43. And a lot of people may not want to do that for that particular minute. So we put a margin that says, well, it could be $18.12 or $22 and change. And that solves the problem of not having a lot of liquidity in the system at the very beginning.
What these people are doing is buying. So you're saying,
Okay.
what you're saying is people are buying the same currency in Bitcoin? Is that what you're doing?
What they're doing is buying and selling exposure currencies with Bitcoin. Exposure. Exposure, yes. Okay. Exposure is just that. I'm exposed to you. Take my shirt off, you see my skin. Okay? So you're not touching my skin. You don't have me, but you're exposed to me. Okay? That's the difference. if I would actually trade Bitcoin for US dollars, 20 Bitcoin is trading at 628. Someone's really good at math, do that quickly. 12. Yeah.
Okay.
So you're talking.
I didn't know how you knew you were making money. Okay, it's up in the right hand
Okay.
corner.
So you take that roughly, what, 12,000, 120,000, whatever. Okay. 20 Bitcoin, and you're going to swap that with US dollars to do a physical swap, right? You have to come out of your pocket with 12, 20,000, whatever dollars. Another person, excuse me? Yeah, another person has to come up with equivalent dollars. You have to make a physical exchange or send it into a brokerage, right? This, you're just doing the exposure swap, right? If you still put your Bitcoin in, this is the super fancy Bitcoin wallet. Super fancy Bitcoin wallet, right? And so this wallet allows you to trade exposure. So instead of having to get the dollars or get the yen, get the Bitcoin, you simply trading the exposure, the price difference. And at the end of the swap, you get whatever profit or loss that you made. Okay, this is much more efficient because now you don't have to have access to these things, so dollars and yen. You know, if you want to do Japanese, Chinese renminbi, right, and you don't have to go to any exchange. This, with the Mt. Gox debacle, this is very timely because this wallet, when you do an exchange to the other person, you're going peer-to-peer. I'm making this trade directly with you. You're not sending money to Mt. Gox, you're not sending it to Citibank, you're not sending it to me. Okay? The only thing that comes to me is the fee that comes out of here. So you're dealing directly with each other. As a matter of fact, even the pricing, almost everything comes directly from this wallet. All the code is right in the wallet, except for a small amount of code on the server that collects my fees and it helps you fund each other. Okay? And it's actually possible to put that in the wallet as well. We just haven't got to that point yet.
So on the highlighted, it says Bitcoin, swap Bitcoin, US dollars, 20 Bitcoin. So how do I know I've made profit?
That was my question.
The value has to go up, the dollars have to go up, then you have to agree.
And if you're going to make money, if you're going to swap Bitcoin for dollars, dollars have to go up relative to Bitcoin. Okay, we're going to do a swap right now. Messiah. Right, we're going to do a swap. Messiah can't afford the swap because he only has 10 Bitcoin in his balance.
628 Bitcoin means $628
Per one Bitcoin, correct.
Okay, I don't know.
Okay, so Messiah, find a swap we can afford to do. Okay, 5 Bitcoin or less.
$627 per
So
one.
swap by Bitcoin, do it now. You can't afford to do that, son. You only have 10 Bitcoin. He canceled?
Where is it say 10 Bitcoin? I'm sorry.
He canceled?
Oh, okay.
Move this window over so they can see how it works. Move the window down. Okay, so in the wallet, right, we have estimated balance, available balance. The difference is when you send Bitcoin, it happens instantaneously. And like,
And you have what?
when you send, if I send Bitcoin to you, it'll happen immediately, instantaneously. But it takes time for it to clear through the system. There's authentication, and so there's several rounds of authentication. So after 5 to 6 rounds, we see confidence. Once it's confident that you really had the money and the money was really sent from me, then it appears an available balance. And it happens anywhere between 30 seconds up to 6 minutes, 60 minutes. Yeah. Okay. So that's the balance. So we're gonna do a swap for search for something 5 Bitcoin or less. So you got you do the swap. So go back, sort it by amount, third column. Do something not found yet for anything besides 5 minutes. Right there, US dollar. Just pick anyone that's not 5 minutes. 11 minutes is too much. They don't want to do it for like 1 or 2 minutes so we don't have to sit here and wait. Okay, that's too short. So pick 1 minute, 1 or 2 minutes for anything that you can afford. That's good. Go ahead. before you do it, right, you click create. This created a smart contract, a simplified contract. Amount, 0.3 Bitcoins. It's going to swap 0.3 Bitcoins for Australian dollars for 1 minute. Okay, and we're putting a margin in there to make sure that he obeys. Remember you asked why?
I'm confused about why the time. What is the time?
Okay, she asked why there's a time. We time the contract. So you can do the contract for 1 second up to 10 or 20 years. Let's suppose you're a big retailer like Overstock or Amazon, right? And Amazon does business all over the world. And they're deciding to take Bitcoin in. And they're getting a lot of Bitcoin, millions of Bitcoins. Nah, that's too much, right? 100,000 Bitcoins a day, okay? They get 100,000 Bitcoin a day in the US, in the EU, and in Asia, okay? They want to hedge this. They don't want to turn it to euros and dollars. They want to hedge it. They want to hedge it to the next quarter. That's 3 months from now, okay? So they have a specific time period they want the hedges. So they'll pick 3 months. And then for 3 months, they can swap the volatility of Bitcoin for the volatility of, and you pick the currency, dollars, euro, renminbi, any country they want. So for 3 months, even though they get to keep their Bitcoin, they don't have to worry about it jumping up and down. And their Bitcoin is now going to act like dollars, etc. Okay? So that's basically the time length or the maturity of the contract. Okay? You can pick anything you want. So you're going to do 0.302 Bitcoin. You're going to swap 0.302 Bitcoin with the equivalent amount of Australian dollars for 20 minutes. Okay, now if you would have built this from scratch, if you do, it'll show you everything. It'll show you how much it is in Australian dollars. But
So if you swap and Australian dollars go up, and you make some money?
right, if Australian dollars go up relative to Bitcoin, you make money. Remember, Australian dollars could go up, you can still lose if Bitcoin goes up more. So you're not just doing a deal on, you know, there are two currencies to consider.
Bitcoin is registered in the stock market now?
No, it's not.
Not yet?
No, this is, she has the Bitcoin registered on the stock market. Bitcoin is in the reality, it's the realities market. It exists. And this is a market that consists of people. So you don't need to worry about a central government or a central country or agency saying you can trade this or that. You trade what you have with somebody who has it. This is the world's market.
Sidebar, okay.
I guess my question is that the whole point of the 20 minutes is that for that 20 minutes, Bitcoin is locked in at $697, right? So no matter what, that's how much it's going to cost, right?
Oh, okay. Yeah, that's
No.
a good question.
For 20 minutes, you're trading the value of Bitcoin for the value of whatever you accept in return. It's not locked in anything. Bitcoin does what Bitcoin does. Australian dollars won't do whatever Australian dollars do. At the end of 20 minutes, whoever made money gets a profit. Whoever lost money takes a loss.
Yeah, that's it.
That margin 20 means 20 minutes? Is that
No.
what you're talking about?
The margin
No, I
is,
spent the time for it.
Okay, because I see 1 minute up there, so I'm kind of going on your question.
yeah, the 1 minute is the length of the contract.
Right,
When you sign a mortgage, you sign a 30-year mortgage.
right.
That's the length of that contract, 30 years. The length of this is 1 minute, and we'll go create a contract from scratch. This was a quick way of doing it by just automatically taking the other side of the contract of what's already out there. All those things are people who are experimenting with this and put contracts out. Okay, Messiah, okay.
Greg and somebody's running in a minute.
Wait. Okay, what he did, he just consummated the contract. So we're gonna wait a minute.
Right, and it doesn't pick up, I can cancel it anytime.
Yes, but you have to pay me $40,000. It's a joke. Messiah, free to swap. So we're going to find a swap, and this is how we're going to create a contract from scratch. These are all smart contracts. Remember, what we're doing, we're taking this digital money, we're programming it. So we're going to take it. We're going to program money right now to enter in a contract. Messiah, do 2 Bitcoins. We're going to swap. Go up to where it says US dollar. We're going to swap. Click the drop down. Let's pick the currency, anybody.
Swiss franc.
Swiss franc, CHF, right there. Okay. 2 Swiss francs for Bitcoin is rough. It's a very small amount. We're going to switch it around. We're going to swap Bitcoin for francs. Okay. You see the upper right-hand corner? 2 Bitcoin Bitcoin is 687 Swiss francs. Okay? We're going to do it for 1 minute. You can do this up to 10 or 30 years. Okay? Go down and hit find. Now, before we do it, right, this is a contract that he made. The principal is 2 Bitcoins. He's going to swap 2 Bitcoins for the equivalent value as of the time of the contract for Swiss francs, which is 687 francs, 1 second. Right? The flexibility in the contract is plus or minus 20%. So it's going to go and put your bid out the market, and anybody who has a bid within plus or minus 20% has an option to get taken on the side of the trade. You can click the prompts where it says, it should say flexibility there, not a prompts. Okay, so you can go anywhere from plus or minus 20% down to 0. At 0, it has to be an exact match. Okay? Okay, so 2 Bitcoin with a 20% flexibility margin of error. We're going to put collateral up, 2 Bitcoin as well. Collateral to make sure that everybody plays right. When Mt. Gox went out of business, Bitcoin went from, I think, 6 and change down to 400 for that night. Absolutely no reason for it to do what it did. You know, the media, hype, traders. The more traders that jump on volatility, the more volatile it becomes. Okay? Let's suppose we're leveraged 10 to 1. Okay, that 200-point drop would have now been a 2,000-point drop. Okay, you would be better off instead of honoring trade just to let everything in the system go. So that's why you put collateral up. You're putting 100% collateral, so it's 200% of the trading from your side. Everybody has to put the collateral up. So every deal here is 400% over collateralized. Okay, super safe. And up until a 200% move, you have absolutely no risk at all. You have no credit risk. You don't have to worry about the other side paying out. They've already paid up to get into it. You don't have to worry about counterparty risk. They can't break the contract. The contract's programmed and locked into the money itself. Okay? After collateral, you have fees. That's the most important part. My kids have to eat. You know, I feed them every other day as it is. You know, okay? And then you have total costs. Your principal plus collateral plus fees. Okay? At the end of the deal, you get your collateral back as long as it wasn't needed. Okay, and you get your principal back, plus or minus any profits or loss. I will continue on, just want to say you had a question.
Well, you answered the question. I was going to ask the question.
Okay. Okay. So, and here's the available balance. The available balance, remember, all this is really just a fancy wallet. Sire, they find?
Does the other side see your available balance?
No.
No.
If you want somebody to balance, you can
I don't know.
put on the sign and hang it out the window. I'm Bitcoin rich, but that might not work. These are test coins. It works live too. My son sold his live coins here last Monday. Okay, now here we have other requests. You can accept the request that you see here, but this is deprecated. We're not going to use this because the market proposed swap is not complete. Messiah, close this window out. Okay, click the My Proposed Swaps button. Okay, these are the swaps that I put out and he put out for other parties. Okay, so those are basically the swaps that I put out to bid. The other one that says swaps in the market, the swaps that the market put out. So basically one is the bid, one is the ask. Close the window. That means that someone put a swap out, but nobody put the other side. Okay, click list contracts. Okay, so these are the swaps that are completed. And when you ask what the profit or loss is, that's how you tell. Look at the completed swaps. And you see profit and loss. It gives you the ID number, which is not relevant, which it gives you what you swap with. US dollars for Bitcoin, the amount that you swap with, the time, start date, end date, profit and loss, and status. Good. Yes. Parentheses are negatives, profits are not negative. Okay, and that's it in a nutshell. So let me know Messiah. Now, this is, we worked out, I think, most of the major bugs. We found 2 bugs that I need to fix. Okay, and that's with the expiries. And after that, I haven't found any. I have a QA guy that goes over, he hasn't found any. That's why I'm going to put it out to the market. Of course, you know, somebody in the millions of people who will play with it will find something. And the latest edition, if you go to click find and swap again site. Actually, no, excellent. The latest edition has more than just currencies. We have currencies, we have global equities. So you can trade equities, you know, everything that Bloomberg has. North America, South America, Canada, London, all listed equities. I don't think we do the pink sheets, but everything else. Okay? We have metals, gold, silver, platinum, copper, aluminum, real estate, commercial real estate, and residential using the K-Shield index. What else? Picture. A lot of stuff.
Metals, right?
Nah,
Metals?
I don't think we can do rhodium.
Metals, right?
Excuse me?
Metals, you said.
Metals, yeah, we did metals, equities, real estate, options and futures. Options and bonds, okay? The options are a little difficult in futures because of the volatility. I market this as a zero trust contract, okay, with no market risk and no credit risk. So if you have something that moves 400, 500, 600% price, normally a brokerage firm would give you a margin call, so you have 6 hours to put money in, or 2 hours to put money